Achieving financial success isn't just about the amount of money you earn, it's about the habits you adopt and consistently practice. The distinction between those who build lasting wealth and those who live paycheck to paycheck often boils down to specific patterns of behavior that either nurture or undermine long-term financial stability. In this exploration, we'll delve into 8 key habits that set apart individuals who accumulate wealth from those who face ongoing financial struggles. 1. Strategic spenders versus mindless consumers. Wealthy individuals are deliberate and intentional with their spending, both when they're building their wealth and after they've achieved financial success. They focus on making thoughtful purchases that enhance their quality of life, investing in areas that truly add value, and avoiding unnecessary expenses. A strategic spender might choose to invest in high-quality, professional attire or educational courses to advance their career while opting for a modest car to save on costs. In contrast, those who struggle financially often engage in impulsive, emotional spending. They buy things based on short-term satisfaction or peer pressure, leading to possessions that bring little long-term benefit. The key difference lies in understanding your core values and aligning your spending with them. Wealthy people spend wisely, prioritizing purchases that contribute to their overall goals and quality of life. 2. Investment automators versus sporadic savers. While many individuals save only what's left after spending, financially successful people take a proactive approach to wealth building. They set up automatic systems that funnel a portion of their income into investments before anything else. This removes emotional decision-making from the process and ensures consistent growth. For example, they might have a percentage of their paycheck automatically deposited into a retirement account or brokerage fund, creating a habit of regular saving without having to think about it. On the other hand, sporadic savers rely on willpower and often forget or neglect to save consistently, meaning their wealth-building efforts are inconsistent and unreliable. Automating investments not only simplifies the process, but it also ensures that you are continuously building wealth without having to rely on fluctuating moods or busy schedules. 3. Network builders versus lone wolves. Wealthy individuals recognize that relationships are as valuable, if not more so, than money itself. They actively cultivate and nurture connections within their industry and beyond, understanding that collaboration, mentorship, and networking create countless opportunities for personal and professional growth. By fostering a network of like-minded individuals, they open the door to new ventures, partnerships, and career opportunities. In contrast, those who struggle financially often try to go it alone, missing out on opportunities for growth due to a lack of professional relationships. They fail to recognize the importance of a strong support system. Building a network isn't just about collecting contacts, it's about forming genuine, mutually beneficial connections that can propel you forward. Wealthy people understand that your network plays a critical role in increasing your net worth. 4. Debt strategists versus bad debt accumulators. For the wealthy, debt is not something to fear. It's a tool that, when used wisely, can accelerate wealth building. They carefully distinguish between good debt that can generate income or increase asset value, such as loans to acquire real estate or expand a business, and bad debt that drains wealth, such as credit card debt used for luxury purchases. In contrast, those who struggle financially often fall into the trap of accumulating bad debt. They use credit for non-essential items, such as vacations or luxury goods, and end up with an unmanageable debt load that erodes their financial health. The key difference isn't about avoiding debt entirely, but about using it strategically to build assets and grow wealth while managing repayment carefully. Wealthy individuals know how to leverage debt to their advantage, ensuring that the return on investment exceeds the cost of borrowing. 5. Income diversifiers versus paycheck dependence. Successful wealth builders know that relying on a single income source is risky. Instead, they seek to diversify their income streams, creating a mix of active and passive sources of income. They may combine a salaried job with income from investments, side businesses, or royalties from intellectual property. Studies show that the average millionaire has at least 7 different streams of income. In contrast, those who live paycheck to paycheck typically have one income stream, usually from their primary job. This leaves them vulnerable to external changes like layoffs or economic downturns. By diversifying income, wealthy individuals create a cushion of financial security and open up multiple avenues for wealth growth. 6. Mindful money managers versus impulse spenders. Wealthy individuals are careful stewards of their money. Practicing mindful money management, they consistently weigh the financial implications of their decisions, aligning them with their long-term goals. Before making a purchase, they pause to assess whether it truly adds value or if it's simply an impulsive desire. In contrast, those who struggle financially often act on impulse. They spend money based on emotions, whether it's a momentary craving or a reaction to external pressures, and often regret their purchases later. Mindful money managers are thoughtful and intentional, while impulse spenders waste resources in ways that prevent them from moving closer to their goals. Developing mindfulness in your financial choices is key to building a strong foundation for wealth. 7. Purpose-driven planners versus numbers chasers. Wealthy individuals understand that true financial success goes beyond mere numbers and balances. They tie their financial goals to deeper personal values, such as financial freedom, security for their family, or the ability to make a positive impact in the world. These meaningful goals serve as the driving force behind their financial decisions, providing long-term motivation. On the other hand, those focused only on chasing numbers, such as growing their bank balance or achieving a specific savings target, often lack the lasting motivation needed for sustained financial success. Purpose-driven planners understand that without a clear vision for the future, it's easy to become lost in the details. When financial decisions are linked to a meaningful purpose, they provide a sense of direction and fulfillment. 8. Financial system optimizers versus set and forget savers. Wealthy individuals actively manage and refine their financial systems, treating their finances like a business that requires regular attention and improvement. They periodically review their budgets, investments, insurance policies, and spending habits to ensure they remain aligned with their long-term objectives. In contrast, individuals with limited financial success often take a set-and-forget approach to saving and investing. They establish their financial systems and rarely revisit or optimize them, potentially missing out on opportunities for improvement. Wealthy individuals regularly tweak and optimize their strategies to ensure their money is working as effectively as possible, while those who are financially struggling may let money slip through their fingers without tracking or adjusting their approach. In conclusion, a journey of consistency and growth. Building lasting wealth isn't about making drastic, overnight changes. Instead, it's about cultivating sustainable habits that align with your long-term financial vision. By adopting these 8 transformative money habits, you can shift the trajectory of your financial future toward greater security and prosperity. Start by focusing on just one habit, and gradually add more as you build confidence in your ability to manage your finances. Remember, the journey to financial success is a marathon, not a sprint, and every step you take today will help pave the way for a more prosperous tomorrow. Your financial future is defined by the habits you create and the small, intentional decisions you make each day.